Hi, my name is David Ward. I'm a partner here at BDO Christchurch in the business advisory team, and today I'm here to do a really quick video on business structures commonly used for small to medium businesses in New Zealand. I'm going to run you guys through four different business structures. The first one of those structures is the sole trader. Now, sole trader is the simplest and most junior form of ownership structure that we have in New Zealand. And effectively, it's just the business owner trading in their own name. The advantages are that it's very simple and it's easy to set up and that you don't really have to do anything. The sole trader uses their own GST number, their own ID number as the GST number and as the ID number of their business. The big downside with being a sole trader is that the risks are not limited and that if something goes wrong, you personally are liable for all of the debts and liabilities of that business. Sole traders don't normally employ people. They can, but by most of the time you're getting to the stage of employing someone, your business has grown a bit bigger, and quite often you'll move on to one of the more advanced structures. The second business form commonly used in New Zealand is a partnership. Now, a partnership is really similar to a sole trader in that there's no company or liability restrictions. It's just two people coming together to join and make a partnership. Typically, a partnership will have to apply for its own ID number because you can't have two different people's ID numbers for the trading operations, so there is a little bit more process around that. From a tax point of view, all of the profits of that partnership flow straight through to the 2 or 3 or 4 partners of that business, so it's all taxed in your own name. There's no dividends and funny things like that like there is with companies. Partnership liability is a little bit different, and they call it joint and severally liable. Now, what this means is that if there's 2 people in business in a partnership and one partner disappears for whatever reason or has no money and that partnership has a big debt, both parties are fully liable for the debt of that partnership, so you've got to be careful with who you go into partnership with. One real big strong piece of advice from us is to have a really good partnership agreement when you set up. We've seen so many instances where 2 guys, 2 mates go into business together and it all turns a bit to custard at the very end. Now, if they don't have a partnership agreement at the outset, that can be very, very challenging. So spending that money with a good partnership agreement up front is a great idea. The third and most common structure in New Zealand for business is a company, a limited liability company. You'll see most businesses have the word limited at the end of their name, and that's because they're a company. A company must register with the Companies Office in New Zealand, and a company must file annual returns and must prepare annual accounts, and it must adhere to the Companies Act, and it must have an annual general meeting unless the shareholders resolve not to. So there's a lot more process around a company, so you've got to be cognizant of that going in. A company can have any number of shareholders, and indeed it can just have 1 shareholder, it can have 2, it can have 100 or even 1,000. So companies are very good, and you can have shareholders coming and going, which makes business easy, and the company itself just continues. Similar to a partnership, we really recommend the founding documents be prepared. So in the case of a company, having a shareholders agreement which sets out the rules and what happens if there's a dispute, or what happens if one of the shareholders dies, or what happens if they can't agree on things. So having a really good shareholders agreement is absolutely critical for a company. There are little different forms of companies, like look-through companies, and there was an old qualifying company regime. We're not going to go into that here today, but there are definitely different things that you can look to do to get tax advantages and different risks, so talk to your lawyer and accountant about that as well. The last structure I wanted to talk to today was about trusts. Now, a lot of people have trusts to own their family home or some other investments. They're not very commonly used for trading businesses, but once in a while we do come across trading trusts. I just wanted to mention it today for completeness, and probably wouldn't recommend again for using a trust in the ordinary course of business. There are they're the 4 main entities. There are a couple of other trading structures you can use, like limited partnerships, joint ventures, branches of other companies. There's a whole raft of other really complicated things, but just want to make you all aware of these 4 main ones, and just that there are a couple of others. And look, finally, just to reiterate a couple of the points I've made, getting really good legal and accounting advice at the outset is critical. If you have any questions, by all means talk to Enterprise North Canterbury, who'll be able to put you in touch with someone. Go talk to your own lawyer or your accountant, or you can come and have a chat to us here at BDO. Hopefully this video has been useful, and thank you for your time.